If you're struggling to analyze the charts and you want a step-by-step guide on how to find trade opportunities, then make sure to watch this whole video because that is exactly what I'm going to be giving you. I'm going to be breaking down my analysis on EURUSD and then giving you the step-by-step guide on how you can replicate it on different pairs. And you can even use this analysis for yourself. So if that's something you're interested in, make sure to leave a like, subscribe to the channel, and join the Discord. But let's get into it. So first, I'm just going to analyze this blank chart on EURUSD, and then I'll give you the step-by-step guide breaking down basically what I've done. So the first thing that I do, and the thing that I recommend you do, is go to the daily time frame to just get your overall picture of where price is going to go and the trend that it's currently in. So here we are on the daily on EURUSD, and as you can see, if you zoom out a bit, you can see we've been trending down for a while, and then you can see in this area here, we get a change, and now we're starting to go bullish. So already you've got your bias is bullish, and it's going to be pullbacks. You know, sometimes you have bearish pullbacks, but our overall trend is bullish until we get a proper reversal that's been confirmed. And something I like to do to confirm this reversal is just look for any kind of order flow, any supply and demand zones that are being respected or not respected. So as you can see here, we get this supply zone, which is respected initially and then broken over there. So that's our first signal that we could be going bullish. And then you can also see this demand zone here getting respected, and also this hidden demand zone. What I mean by that is the wick of a candlestick is often the liquidity grab. You can see there's some equal lows here with these past 2 days, swept by this wick and then pushing up. And so you get a pullback into this hidden order block and price takes off again. And you can also mark up, you know, this demand zone for future reference, but we've gone quite far away from them, so they're probably not that useful. As you can see here, your bullish order flow is being respected. Get all these demand zones that get respected. Price pushes down, pushes up, and then pushes back into it, and pushes up. And the main thing that I saw when looking back at this here is that you can see we're trending up, and we get this liquidity grab, and then push up, and then price eventually comes back into it and takes off again. And if you saw this here, you could look for trade entries in here, especially when you get this liquidity grab. You could try and get a change character in your kill zone or something like that, whatever your entry is. This is kind of the process that I am taking on the daily time frame, looking at supply and demand zones, any liquidity grabs, stuff like that. And you can see this big supply zone gets broken. It's not respected. I mean, it gets respected initially just for a pullback, but eventually it gets broken. And this keeps confirming that we are in a uptrend. And so we'll be looking for longs. But then if we move on to the more recent stuff, what you're going to want to do is, in this case, you know, we've had a pullback, and the question is, are we going to keep going higher or are we going to have a reversal? And a way to determine that is to look in this pullback for any supply zones. So as you can see, there's a supply zone here that we can mark up, and price is currently in here. So something I would be looking for is, as we're on daily, when we go down time frames, I'll talk about that later. But if you look at a change character on the lower time frame, that could suggest that we go short. And that could be a possible trade entry. But you're always going to want to look for what price is doing in the reversal points. So as you can see, we were pushing down, and then something happened here that turned us bullish. And again, what you want to do is just look back. So if I move this out of the way, again, you can see a hidden order block. This one isn't as clean, and it didn't take out any liquidity, but it is still a wick of a candle, and especially on the daily, that's going to be some liquidity grab within that day. And price comes back into it and then takes off. And so you could have got a trade opportunity in here. If you saw big wick on this bearish candle and then bullish engulfing candle, you might think that this signals that we're going along, and so you can look back, see if it's in any hidden order block, or if you're on a lower time frame, it might be an actual order block, and then you can look for your entry. You get liquidity grab, push up, and then pull back to your zone and then take off. If I just draw that, you can see that this is kind of what you're going to see, and you get a pullback, and this is kind of our textbook entry. You know, you get liquidity grab, push up, change of character, and then pull back to the demand zone or supply zone if you're going short, and then take price back up. So that's kind of what you're looking for. But now if we just go to the lower time frame, we can have a look at what price is actually doing. So for me, I like to go to the 4 hour, and if we just look back, what you can see actually here is that there was a 4 hour demand zone, you know, took out liquidity and shot up, and then price came back into it. And actually you could have got a very nice entry just off of this, either this whole zone here, you know, you could have taken an entry you've got liquidity grab of this, liquidity grab, push up, and then pull back to your demand zone before taking off again. But to increase your risk reward, you could have taken a trade, something like this. After you've marked up your daily supply zone, you could have taken something like this, and this would have given you a 1 to 7, 7.5 trade. And what you could have done if you wanted to increase your risk a bit more, refine your zone, as I mentioned with hidden order blocks, you can just take the wick of this candle, which was happened before the big push up, and you can place your entry on there. Sometimes you won't get triggered, so you'll miss some trades, but here you would have got a 13R trade. Obviously, this is an extreme example. They won't always be this good risk rewards, but this is the kind of thing that you can be looking for and you can be getting. So now you're on the 4-hour, you can also be looking for order flow in this direction, and something you could have taken, which is something I was looking at and I was about to take, but it didn't meet my full criteria. I was waiting for price to close and break above here before pulling back, but instead it just wicked and then pulled back, so I didn't place my limits, and it did provide an entry, but I didn't take it. But this is the kind of thing you can be looking for demand zones within your order flow, within your bias direction. So again, maybe over here, what you could have been looking for is either this whole demand zone here, and pull back to that, or a pullback to just a wick. But we didn't get a deep enough pullback and price just took off. So sometimes you will miss trades, but that's fine because that's just part of trading. And so while it's better to trade in line with your trend, our bias was bullish, and so when the lower time frame is bullish, that's when we want to be taking trades. If you have more practice, you can also, if there's a clear pullback, you can try and take trades here. But I don't see any clear examples I would have taken. And you need to be careful about looking for changes of character when you might be turning bullish, because you don't want to be trading off this supply zone for multiple reasons. First one being that we were going bullish, we had a liquidity grab into the order block and then change of character and then pull back to this demand zone, so it looks like which is being respected, and so that looks like we're going to be going along. And also there wasn't any imbalance created on this by this supply zone, which is another reason to ignore it. So those are the two timeframes that I like to use for my analysis. The daily and the 4-hour gives you a nice overall picture of where the price is going, and you can move down the timeframes, go to the hourly to see if there's anything else, and you can see what happens here. Again, the markets are fractal, so basically whatever you see on the daily, you can see on the 4-hour, you can see on the hour. They're all going to look similar, and you can look for order flow, supply and demand zones getting respected, and you might see something pull back to this hourly demand zone, and then you could even look for your setup in here on a lower time frame if you wanted to really refine it. But just be careful about this daily supply zone getting respected. And as I mentioned about that, if we go back up to the 4-hour, something that you might want to see is a change of character on the 4-hour time frame. Break above and then close below, and then we might go short, either just to this demand zone and then we can break through this supply zone, or we could get a full reversal. Okay, so these are the steps of the guide that you might want to follow if you want to take this approach to looking at the markets. And so the first thing that you're going to want to do is going to mark the supply and demand zones on the daily time frame, while also looking for your liquidity sweeps. So that's something we did. And this will give you the overall picture of where price is moving and the trend that you're in, whether bullish or bearish. The second thing then that you're going to want to do is mark supply and demand zones on the 4-hour time frame, or a lower time frame of your choice. I like the 4-hour, you might like the 8-hour, up to you. Mark supply and demand zones on that time zone as well. And again, look for liquidity grabs, look for the zones getting respected or not respected, so that you can get your idea of the trend on that time frame as well. And then third step is you're going to wait for your lower time frame to align with the daily time frame. So in this case, wait for the 4-hour to align with the daily, so that you can take trends in the direction of the high time frame trend, while getting nice entries on the lower time frame with a higher risk reward. And that is step 4. You can look for trade entries on this time frame, the lower time frame. For example, when you get price changing into the direction of your daily trend, you can look for trade entries, or you can go to a low time frame when price comes back into one of your demand zones or supply zones on the 4-hour, and look for your entry on there. If it's intraday, you can look for any setup, 5-minute change character, whatever you want within your zone, and maybe use time kill zones, ICT's kill zones, if you want to only trade during certain times. So these are the steps, and this was my analysis on EURUSD. So it might help you in the future if you're looking at this video fairly recently. But this is kind of the overall approach that I use, and that I think will be helpful for some of you if you need a structure to your trading. So hopefully this has helped, and if it has, please do leave a like and subscribe to the channel and join the Discord if you want to be in a community full of other traders like yourself and like me, where we can share ideas and just help each other. But thank you for watching, and I'll see you in the next one.